Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 22nd of June, 2020. You know, you're a tale of two cities. Well, it's really a tale of two types of indices. You got the QQQ and the Dow, rather the NASDAQ. They are the powerhouses. One mimics the other. The NASDAQ is what everybody follows, and then QQQ is a derivative. And these markets have taken advantage of the COVID-19 situation. They took advantage of getting themselves known, and it goes right across the whole arena of tech. Now, the markets that are having a rough go of it are everything else, be it healthcare, be it the financial sectors, or whatever. We're getting a rally today and continuing through tonight, and the question is, what about it? We'll talk about that. You're getting a little bit of a bounce in the energies tonight. Remember, on Wednesday, we'll get the API numbers. I'm starting to look with prices up here in the $40 to $43 area that you're probably going to very shortly see U.S. producers adding a few wells. Foreign currencies gaining against the dollar. The gold was up sharply today. Myriad of things, probably COVID-19 fear. Also looking at the marketplace around the world and saying, I don't know what's going there. Bloomberg carried a bullish article this morning in gold. That might have helped it. When you come to the S&P 500, as I said, if you look at each close, and this is only of closing prices on a week-to-week basis, you haven't had one situation where you've gotten under a prior close and broken the pattern where you have lower highs and a lower low on a closing basis. It'll come, I don't know from where, and I'm certainly not trying to pick it. When I look at the S&P 500, I see a market that is still very much stuck between just up here, this over 3,200 level, and just over the 2,900 zone. I still see a pattern of lower highs and lower lows. That is bearish. The 18-day average is right here. I think the pros went short against that today. And I think the pros will throw in their towel if you get over 31.4475. I don't think they'll become buyers there. And the reason is you'd have a lower low and then a higher high. I think they're playing to see if they can get control of the market away. When you look at the Bollinger Band, let's assume the market surges to the upside. I say the upside because it's been easier to surge to the upside than the downside. Then the 32.18.5, 19 level becomes a key resistance. If the market suddenly breaks down, look for the 200-day average, the gray line here, to become the first support with the lower Bollinger Band at 29.82 the second. When we study momentum, it's flat, maybe trying to point up a little bit. I can make that argument, but I still think the pros were hitting this market at the end of the day. The NASDAQ is the strong market, and again, I'm going to repeat it. I think it'll have trouble at the upper Bollinger Band. It's been having it. That doesn't mean I'm bearish against that number. It means that's going to be the fence that stops it, and if we get an embedded reading down the road, we're on a settlement basis. Both the red and the blue lines are staying over 80. Did they do it today? Let's get back to Monday. They were not there Monday. They're just overbought. You got to get through today, tomorrow, which is going to be Wednesday and Thursday, to prove to me it can stay embedded. Haven't done it. I'm looking for strong resistance at 10,214. Pros take money off the table. I think the big boys are selling the Dow right here. I think that they know that if you get over 26,320, you break the bear pattern. If the market decides to let go from here, because momentum is flat and they still have the bias down at this point, I think they're going to look for the 24,714 to 24,700 level as the support zone that they'd consider coming out. And obviously, I still think they'd be wrong, 26,320, but I don't know that they'll reverse to the long side. I see the same thing in the Russell. I think the pros are selling it right here. They can put stops over the highs of last week. Well, actually, it's the highs, I believe, of Friday, which was, right, am I right? Yeah, it's Friday. And that was 1451.20. That would break the pattern of lower highs, lower lows. If they're not stopped out, just like they were looking at the other chart, I think they'll look between the 100-day average and the lower Bollinger Band right in this area as support. Momentum, not turning up on this. In the VIX, the market has been in a downtrend on the swing line, but the bias is up since the market's staying over the red line, the 18-day average of closes. Momentum flipping to the downside slightly, but you need to close under that 18-day average to get it into a downtrend. I don't see any trend in the bonds. I see a market that's doing pretty much what we talked about, waving right against that 18-day average. This is a market the Fed's going to look at and I think contain it by, remember, when you drop in the futures markets, rates are going up. When you rise, they're dropping. I think they're going to contain the market on any drops. In the note market, the curve yield's different. This market's got a bid, higher lows, higher highs. Now, when we come to the momentum here, both numbers are not going sideways over 80. You're just plain overbought, pretty much stuck against that 18-day average. Dollar index, for all the work the dollar did once it lost its bearish embedded reading, all I was looking for was a challenge of the 18-day average of closes. The market gave it on Thursday, and now it's just starting to play there. This should be the stall area. I, for one, don't think the dollar has big upside potential. Looking at the longer term charts, I see a different problem in the market, but we'll see if I'm right or wrong down the road. And we'll see if the euro finds its support here. It's the flip-flop of the dollar, and finds good support right at that number. In the Japanese yen, the market is what? It's trying to embed. So embed means that both numbers are going sideways over 80 on a closing basis for 3 days or more. So today they did it, which is Monday. Friday they did it, not the day before. Now early on in the Tuesday evening trade, they're succeeding, but it's early. We don't know what's going to happen as we get into the next 12 hours or so. So the benefit should go to the bullishness of the market, not the bearishness. And what does that say if the yen's going up? I wonder. I'm also watching, do we get a crossover where the 18-day average gets over the 100, which would be called a bullish crossover. It hasn't done it yet, but boy, it's starting to narrow in on that. I've moved to the September Bitcoin charts. It's back into an uptrend, higher lows, higher highs. Momentum has worked out of the oversold condition, pointing up. Unless you get back under 94.65, the trend is up. If it makes a run, maybe you can get to the upper Bollinger Band, take out 94.65, and you're back to neutral. That would not turn the chart bearish. When I look at the Brent versus WTI, the differential's just hanging here at $2.50, favoring Brent. Now, you're at the upper Bollinger Band. You know what I say. The first time you hit an upper Bollinger Band, that number's 43.44, and we're at 43.60. We're at 43.44, and the Bollinger Band's 43.76. I wanted to see that right. If you hit that, that's where I think the pros are going to take their money off the table. So you're in that zone. Do you want to play for a quarter? That's up to you. You're overbought. Each time you've hit that Bollinger Band, you've had reactions very shortly back to the downside. I could be wrong, maybe it won't happen again, but that's what I'm expecting. In WTI, same thing. Overbought, getting up to the upper Bollinger Band, same identical thing. Rebob gasoline, I've mentioned to you, July 4th, not far away. This is where the buying comes in, not just to futures, but cash markets, you know, the gasoline stations. We're not going away. In other words, U.S. people are staying in America. That doesn't mean they're not going to travel. They are. They haven't been to families. They haven't been in a lot of spots. I'm looking to see if driving picks up. I expect it to. And in the nat gas, well, it's going to be interesting what this market wants to try to do when it grows up. What do I mean by that? What I mean by it in the most simple of terms is the first day of summer is Saturday. We're still at spring, it's hard to believe, but that's it. The market's got an embedded reading. I think today's intraday rally was all about, frankly, just getting the market up to a level where the market could make a small run and then seeing what else it could do. Very interesting chart in the sense it tries rallies, but it doesn't seem to be able to hold on to them. You know, one of the things I like to talk about are technicals, because in a chart, by the time you know the news, so does everybody else. But you can interpret a chart the way you want. It doesn't mean the guy next to you does. And when you do that, if you understand these different oscillators, trend lines, and so on, or at least get an understanding, you pick up the news on it. Tell me that you don't watch financial TV. They don't talk moving averages, oscillators, the market's making higher highs, higher lows. You hear that all the time. But as important as all that is, money management fits right in. It's one of the key tools. I helped put this together. You might want to take a look at it. It's on our website under free offers, Guide to Technical Indicators, volumes 1 and 2. You can also click up here, and that'll take you right there. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.